So now we're going to be talking about support and resistance. Firstly, what is support and what is resistance? Support and resistance are basically the floor and the ceiling of the market, where price fluctuates in between and either rejects or breaks the certain level that it reaches. Okay, so what do we need for support and resistance? So basically, firstly, we need multiple touches on the horizontal line that we have drawn on the chart. Okay, and we also need key levels, specifically round numbers on the chart from a weekly chart and a monthly chart. So when we do our analysis, we do what we call a top-down analysis of the market or the specific currency pair that we are trading. Okay, so we go on to either the monthly, or we start at the monthly and look for round numbers. Round numbers are psychological numbers that most people or most traders look at, and it's where we see the market reacts the most. Okay. We also move down into the weekly chart because it is just as important as the monthly chart. We also look for round numbers. Maybe on the weekly chart we look for the 50s or the quarter numbers like your 25s and your 75s as your support levels or resistance levels. So right now we're going to pass it over to Tyson so that he can show you what exactly I mean by what I've just explained. Thank you.
Hey guys, as he has already stated, I'm currently going to draw the support and resistance levels here on Euro USD for you guys so that you can understand practically how you can draw them. So here on the monthly, let's go back to our candlesticks first. You can tell that price was moving up and down in between support and resistance levels, and there was a whole lot of sensitivity around this market where price pushed to the upside and rejected a certain resistance level, but then we first need to draw it before we can get to trade. So let's see what the monthly has for us in store. So we go back to the line chart to see those areas of sensitivity in the market. So the first one that I can see here is around this region where we have had this rejection, a second rejection, a third rejection, a fourth and fifth. So we had multiple touches. So let's draw it. So one thing he stated as well is that we also need to make these levels round numbers. So you can just type in on the coordinates here. So the first one is right around this region. So we've had this rejection where price came close, but then it didn't go to the exact zone. That's one thing we're going to teach you about as well later on in the lessons. It's not an exact area, it's a zone. And once again, we had a false break here, a rejection. So we can also use a candlestick chart just to see how accurate this is. So as you can tell, price was attempting to break to the downside. However, due to the buying pressure around this region, the bulls pushed the market to the upside. So we got that one on lock. So we go back to the line chart. Pay attention to the next one. So price currently is moving to the upside. As you can see, the bulls are starting to take control in this market. So let's see what happened, or where price is going currently. So what I can see at the moment is that we had a rejection here, a second rejection, once again, a third one. So let's draw our resistance level. Actually, our support in this case, because price is already above the price. The horizontal level. So once again, we pull the candlesticks, and we can tell just by looking at this chart that prices were rejecting here. So once again, we can use a round number to make it more accurate. So 115,500 is our zone. So we got that one on lock as well. We go back to our line chart to look for another one where price is currently going. Since this is our support level, we need to now look at our resistance level. Excuse me. So we had a rejection here, a second rejection, a third rejection, and a fourth rejection. So we had multiple rejections at this level. So let's draw it. Right there. So let's pull our candlestick chart. We can tell that prices were showing a whole lot of sensitivity around these regions. So because this one is on the monthly, and when we drop down in time frame, we need to distinguish these levels, a daily one from a monthly to a weekly. So on the weekly, to make sure that it's different from those other ones, we draw, on the monthly, to make sure that it's different from the weekly and the daily, we need to insert shapes around these horizontal levels or strips. Sorry about that. Let's just zoom in and just make sure that it fits in, because when you drop down in time frame, it gets bigger and bigger. So to make sure that it's exact, you just clone it. We've cloned this one, and then we clone the last one, and it's gonna go to this monthly level. And then yeah, we're down here on the monthly. It's time for us to drop down in time frame to the weekly. So here on the weekly, we draw them in between the monthlies. So halfway through these levels, this is where we're going to draw them. Obviously, we need to pay attention to the current price. You cannot come here and draw your resistance level. It's not relevant to the current price. So you're just cluttering your chart with so many levels. So let's pay attention. Let's zoom out to get a bird's eye view. Then once again, same process, we use a line chart. So let's see, we had a rejection here, a second one, a third one, a fourth one. There's a whole lot of rejections. So we have multiple rejections around this level, which makes it really imperative for us to draw it right there. I'm just trying to make sure that it's accurate, guys. So right just about there. So let's see in terms of a candlestick chart how it looks. It's quite clear due to this huge wick over here where price pushed to the upside, but then because of the high selling pressure at this weekly resistance level, we saw the sellers pushing this market aggressively to the downside. So it's a relevant one. Once again, it had a second attempt to break to the upside. We formed what we call a bearish pin bar, which we're going to cover later on in the lessons. So we got that one on lock. So for the weeklies, we know that it's that thin black horizontal line. You don't have to insert any shapes around the line. So go back to our line chart. We need to draw one in between these levels here, the monthlies. So as you can tell, we're accurate. It's just right there. We place it 1, 2, 3, a value area where price was showing a whole lot of sensitivity or activity around the line. Once again, we had a false break to the upside. Let's just use a candlestick just to see. As you can tell from looking from left to right, that price was showing a whole lot of sensitivity around here. A bullish pin bar on the weekly, price pushed it upside, came back, rejection, so price was moving in between these levels. Valid. Now, you mentioned that we're going to draw them from the monthly to the weekly. We're going to take it a step to the downside and go to the daily. This is where we're going to draw our shorter term lines or horizontal lines of support and resistance. For this ones, I love to use what we call a horizontal ray. So once again, same process of drawing the weeklies and monthlies. We use a line chart. Okay, I can see this one right there. So let's go back to the candles. Excuse me, guys. So looking from left to right, you can tell that price rejected here and it pushed to the upside. This is where it began, right? And came back, had a false break to the downside where prices aggressively moved to the upside. However, the market is always moving in two phases. It met our resistance level on the monthly, it came back to reject and continued going higher where it had multiple attempts to break to the downside. However, due to the buying pressure around here, it moved higher. As time went by, price came back and it was still relevant. So we drew it right now. As you can see, it's currently relevant and price might be going higher back to it. So we'll see what's going to happen when it gets there. So for the 4 hour, don't draw any levels. We're just going to end here, guys. Peace.